Hello, I'm Bruno Bertrand-Delfau. I'm partner at McKenzie in London, specialized in funds and in particular in secondaries. And I have the pleasure to interview today André Bourbonnais, who is head of private investment at CPPIB.
Hello.
André, how do you see the market for your particular type of investments?
Well, there's no question that the market has been very frothy this year. We have looked at a number of transactions, but unfortunately we haven't been able to convince ourselves and have the conviction to buy any companies at the multiple that are required by the sellers. We've done a few transactions in direct private equity, none in infrastructure, and have been very, very selective in all the processes that we've entered into. And there's a number of reasons for that. I think that the availability of credit, the fact that the strategic are also very involved in transaction, and they have lots of cash on their balance sheet and therefore need to put that cash to work. And generally also the dry powder in the private equity world is such that the GPs probably feel pressure in order to deploy capital as well.
You had made last year some landmark investment in GPs undergoing restructurings. Can you say a word about that? Do you see that as a long-term trend on the market? Do you think that you will invest again in this type of investments? And do you feel that the market is having a more standardized approach of this particular transactions?
We've definitely seen an evolution in the secondaries market. So we started that business, and I think as an institutional shareholder, we were one of the pioneers really to have a specific secondaries business. And it mostly started with a combination of LP secondaries, where we were buying interest in funds that LPs didn't want for a number of reasons, whether it was strategic, whether it was over allocation to a class, or whether they needed to make some room for further commitments. And we've been fairly aggressive in that market. We've also had the benefit of doing a number of transactions that you're referring to, the so-called direct secondaries, where either, for instance, the bank for regulatory reason were spinning off their private equity captive arm, or in the case of Berman and Kainos, which are the two transactions that we did last year, our transaction where for some reason the GP couldn't raise another fund, had good assets under management, something had happened to the team and needed a sponsor in order to be able to continue their activities. And we've been looking at those two transactions. In the case of Berman, it was an event within the management of the team. In the case of Kainos, it was because we felt that a subgroup of the total fund, which was H&M, was having a lot of success in their space, which was the food space. And we decided to continue to support them both by buying the asset out and of the LP base and by committing further funds for their continued growth.
And this year has been not terrific in terms of volume of investment in this class of assets because of the pricing tension that you are mentioning. How do you see the next 12 months?
Well, I do believe that it's a cyclical business, and we're really at a peak. I'm not saying that we're not going to make any more investment in that environment, but they need to be we have to have a lot of conviction that we're paying the right price and that there's continued growth in the asset that we're buying. And that we're getting them at the right price. I don't have a crystal ball, so I don't know, if the market will continue to be the way it is, or if there's going to be some kind of correction. But the beauty is that we are constantly in the market. We mostly for our LP secondary only do overlapping fund, and therefore we have a very good database of all the funds that we have under management. We proactively price all those funds that are interesting to us on a quarterly basis, so we can act very, very quickly if the market turns.
And do you think that Europe is more promising today in terms of pricing than the US, which has been quite hot over the last month?
Yeah, I would say that for the time being, we see opportunities both in Europe and the U.S., but the European market seems to be a little bit more reasonably priced than the U.S. market.
So we are going to see you a lot on this side of the Atlantic.
I hope so.
In the coming months.
It's we have a big fund. We need to deploy capital, but we will only do it on if we can get good performance. And right now, like I said, both on the direct side, on the fund side, the secondary side, it feels a little bit too hot for us. So we've taken definitely a bit of a break in the system.
Thank you, André.
Thank you very much, Bruno.